I understand that a short time ago the Reserve Bank's Monetary Policy Committee announced a 50 basis point reduction.
Great news.
In the official cash rate, taking the rate.
I'd just suggest that applauding that sort of activity is not wise.
Taking the official cash rate to 3.75%. For context, members, just over 5 months ago, the OCR was at 5.5%. And official cash rate reductions and expectations about future changes affect market interest rates and therefore have a direct impact on New Zealand families and businesses, providing a boost to the economy.
Supplementary. What did the Reserve Bank say about future OCR changes?
Well, Mr. Speaker, this is where it gets interesting, because today's 50-point reduction was widely anticipated. Probably of more interest to economists and financial markets is the bank's revised track for the official cash rate going forward. In today's release, the bank is signalling faster reductions than it has previously. And its forward track for the official cash rate is consistent with further reductions of up to 50 basis points by the middle of this year, and for the official cash rate to be at 3% by the end of the year. And just in case you're wondering, Mr. Hipkins, this is good news for every family with a mortgage, and the fact that you're interjecting about it tells me you're out of touch with that.
Supplementary. What does this mean for ordinary New Zealanders?
Well, Mr. Speaker, falling mortgage rates boost household budgets when borrowers are on floating rates or when they come to refinance a fixed mortgage. Currently, 55% of mortgage lending is either floating or is fixed for 6 months or less. So that means that many people are set to benefit when the official cash rate falls. Infometrics has previously estimated that by the end of this year, as a result of lower mortgage rates, households will have another $45 million to spend every week. And that is, of course, good news for families who in recent years have suffered a protracted cost of living crisis.
Oh, just be happy. Just be happy. Cheer up. Just be happy.
Point of order, Mr. Speaker.
Okay.
I seek leave for the opposition acting finance spokesperson to ask that as a question.
Supplementary. What do the Reserve Bank's latest economic forecasts show?
Well, Mr. Speaker, I mean, obviously that was an extremely astute interjection because, yes, there are always risks to the economic outlook. But the forecasts, well, Mr. Hipkins, it would pay you to listen because the forecasts tell a positive story. They show economic growth returning in the last quarter of 2024 and picking up this year. The bank expects unemployment to peak at 5.2%, which is, of course, just a shade above where it is now, but very importantly, members, lower than what it was forecast to reach when the last people were in charge. And members, there is also a forecast for employment to increase over the course of this year. And I note that in the August 2023 monetary policy statement, when another group of people were leading the country, the Reserve Bank was expecting unemployment to peak at 5.3%. So today's forecast is a modest improvement on that. And clearly, the bank considers inflation's under control, creating space for further interest rate reductions.